What's up, YouTube? Silicon Valley Bank depositors get bailed out and Signature Bank goes down. Let's discuss this in today's video. One problem mitigated while another one pops up. Will there be more? Maybe. In my opinion, the government did the right thing here when they decided to step in without hesitation. The risk to small businesses serviced by Silicon Valley Bank can't be understated. These businesses are part of the recovery of the economy, and I think they know that. They made two decisive moves to provide a base for the banking system. In reality, if they let these banks fail, this would have caused a cascading effect that I spoke about in my last video. Having the government as a backstop for assets will not cost taxpayers anything and is a relatively safe play for the government. This is different from 2008. We're not talking about debt notes. We're talking about real assets, just like gold and silver. These banks have much better portfolio positions than some would have you believe. The losses are limited to the difference in percentage point of bond prices, but again, it's the volume and liquidity that's the problem. The overall percent is not that large of a loss. SVB will be dissolved while the government sells off its assets and sets up a new program to provide loan services for banks as a stopgap to cover similar issues with deposits. The Fed's financing will be made available through a new program called the Bank Term Funding Program, offering loans for up to a year with qualifying collateral. I doubt there are many mid-sized banks that aren't susceptible to a bank run. The risk is real because of the repeal of Dodd-Frank regulations for mid-sized banks and their lack of stress tests for banks in this tier. Couple that with FUD and you can have a bank run at any time at any number of banks, even though the banks are fully solvent, just not liquid enough. The biggest problem right now I think we have is fear, uncertainty, and doubt. The assets these banks have aren't really that bad. Signature Bank, for example, has a portfolio that services real estate companies, law offices, with smaller positions in digital assets like crypto. In addition, they had cash on hand to the tune of $4 billion, but just not enough to cover the withdrawals all at once. When I think about it, the industries that are affected right now are the most cash-rich industries. We're not dealing with debt. The bankers and government know that it's in their best interest to stop this as fast as possible before it spreads even more. When your cash-heavy investors are spooked, it's only a matter of time before that spreads. By reassuring people that the government will cover deposits, this should add a layer of confidence to the banking market where it counts. The real black swan is if people start to do this in larger amounts. More people with smaller denominations across wider groups. With the case of SVB and Signature, this was mainly tech companies, venture capital, lawyers, and real estate companies. The ones that gained the most in the past few years, and the golden eggs are going to be protected by the government. The question is, will regular people start to make bank runs? And if they do, who's actually liquid enough to support that? I don't think any bank can sustain a bank run, though this does bode well for gold and silver. Crypto did surprisingly well today given the banks that support crypto are having problems. I think overall, since banks and crypto are both problems right now, the safe haven is good old gold and silver. Where I favor gold more than silver, but I do think silver has a chance for bigger runs. I'm sure everyone watching the gold and silver prices explode, but I've been in the game long enough to be unfazed by these kinds of increases. Silver up $1 or 5 cents is big for silver, but let's be real, it can drop faster than it rises. There's a good chance for a run, but for now, cash is still king for me. There's money to be made though, so place your bets. The banking industry got shook, but remember last time, they ultimately came back stronger. If you play the long game and pick the right cards, this is one of the best times to make some big changes in your financial life, for better or worse. If you're still watching, hit that like button and consider subscribing for more conversations about finance and the economy. Or feel free to comment. Thanks for watching. See you on the next one.